Welcome to the IRS Whisperer podcast. This podcast is designed for tax professionals with a spin toward IRS representation. My name is Henn, and I'm a CPA CTR. New episodes will drop weekly on Thursdays. Each week we'll be giving you exciting material to help the tax pro in their tax practice. That's assuming you can say exciting and taxes in the same sentence. On the IRS Whisperer podcast, each episode will cover 3 different areas of a tax practice. We will present the marketing moment, which will cover various topics in marketing or sales to help you generate more clients and revenue in your business. The world of practice management will give you suggestions on how to better run your tax practice. And we will also cover our technical time that will cover some of the latest changes or tips, tricks to help you in handling your IRS representation case. So I'm so glad you are here and hope you enjoy the show. Now, on to today's episode. Welcome to the show. This is Henn CPA coming to you today with the IRS Whisperer. And today I wanted to talk about procrastination. Procrastination is probably one of the things that we as tax professionals encounter a lot of, especially as we get here nearing the extension deadline time of the September 15th for business returns and the October 15th deadline for individuals. And I wanted to cover a list of 10 different things that cause you pain, cause you anguish, cause you stress related to procrastination. And I want to make sure that you understand that. Let's go with this, okay? So the first thing is missed deadlines. Obviously, deadlines get missed because people bring stuff to you at the last minute. They expect you to jump through hoops. Have you ever had that client bring all of their stuff, bring it to you on the 13th, the 14th, or even the 15th of April, or any other deadline? They bring it to you at that last minute. And invariably, there's more than one person that does that. And when they do that, it just causes you to miss deadlines. And then guess what they do? They point the finger at you. Unless you keep allowing this to happen, that nothing is going to change. So make sure that you do that. Okay. Second thing, increase stress. Okay. I know for most of you, by the time you actually get to April 15th, and for many of you, you have a second tax season, the September and October deadlines, and just the stress of people bringing things, you've been hounding them for weeks, for months, try and get the stuff in, and they do it when they want to. So the stress, just the extra hours and everything that you're doing. So procrastination just causes increased stress. Not to mention that procrastination causes you to work extra overtime hours. And sometimes it's overtime hours you weren't anticipating because people bring you stuff at the last minute. If you don't take control of that, they're going to abuse it. Okay? So that causes you to miss personal time, sporting events, to the kids' game, the plays, the musicals, the recitals, any that you want to do with your fun time. So you want to avoid procrastinators for that purpose. Next thing is financial losses. Obviously, late filings can lead to penalties. And again, when they point their fingers at you, that means that, the general aspect of our practices, penalties, if it's our fault, usually we're the ones who are responsible. They're responsible for the tax and the interest for the clients. We are responsible for penalties. So basically, we do whatever we can to get rid of penalties. And unfortunately, sometimes that can't happen. So you have to be able to push back on that. Next thing is that it could cause some reputation damage. Okay, so a disgruntled client, because they bring you things at the last minute, expect you to jump through hoops. Some people just don't. You didn't get it to them timely. You made them come to your office at 9:00 at night. You made them run to the airport post office because it's open at midnight. They don't take responsibility for it. Because of that, they end up whining and complaining to other people. So that can cause damage to your reputation. The next thing is lower quality of work. Of course, we are rarely rushed and doing our best quality stuff. Unfortunately, sometimes that's how things get missed. And when you miss those things, that's when you then miss that W-2, the 1099 that they included, or it gets missed on the return. Of course, they get a notice later that you have to end up spending more time to deal with. And now you're also getting stuck with potential penalties. Having procrastinators for that purpose is another one. Next one is client dependence. By allowing procrastinators in your practice, you're enabling people. If you continually let them do it to you year after year, and I've done this many times where I would let people slide and I would say, hey, you got to get it better. Finally, I just started putting in a rush fee. I would tell them that it was going to be another $500,000 if they bring it to me within a certain time frame. Or like in tax season, I set the third Friday of the month as the last deadline for you to get your stuff in if you wanted to get it done by April 15th. Because if it doesn't come in by then, or if it comes in after then, it's not getting done by April 15th. There might be a few exceptions that I do with that, but I instituted that rule probably over a decade now, and clients adhere to it. Every once in a while you get somebody saying, oh, I didn't know, because they didn't read the 5,000 emails, letters, and other things that you've had that say that this deadline exists. So you got to stop that dependence on you. Not to mention the next one being burnout. With the overtime, all this extra stress that we have, that can lead to burnout. You've had that one too many tax seasons. You've had that one too many tax seasons. It gets old sometimes. Not to mention that this builds up personal frustration. Okay. That constant cycle of procrastination, panic can leave you frustrated. You feel unappreciated. You feel like, why am I doing this? Is this really worth it? And when you get to that point, it's very frustrating in your life. And lastly, the opportunity cost. Because you keep dealing with these procrastinators, sometimes they're family, sometimes they're friends, sometimes they're people that you're not billing well enough, and you feel like you're stuck. You're not even stuck to family. Okay. Sometimes it's best to tell them that they need to find somebody else. The tough love approach really helps, not only for your sake, but for theirs. And when you look at that, by working with this person who's a procrastinator, then what ends up happening is that you're losing the opportunity to work with somebody better who likes you, appreciates you, and not only that, but probably is willing to pay you more for your services. So do what you can to get rid of procrastinators. Don't let them into your practice. Learn the warning signs so that these people don't cause stress, cause you pain and the suffering, and let them go to somebody else, because there'll be plenty of other people who'll be happy to take them. Now, let's go to a technical topic this time. Today, I wanted to talk about installment agreements, or AKA payment plans. For those of you that are tax professionals that haven't really gotten into the representation world, this is a tool in your toolbox that you should be using because it's a natural fit for tax prep. It's not uncommon. You get somebody who you'll prepare the return, you get all the way to the end, you deliver the return, and you slide it across the desk, you show it on the screen if you're using a virtual platform, and you go through it, and then they owe money. Now, in some cases, I get nervous giving people bad news, especially if I think that they're not expecting it, or they've given me words that they were expecting something else. And I feel nervous about doing that. But when I slide it across, they're like, okay, I half expected that, or I expected more. I like it when they said they expected more. If you don't know for certain that they have the wherewithal to pay, ask them, is this something that you can pay? We could set up a payment plan for you. And if that ends up being the situation, then you need to charge them accordingly. I don't use form because the IRS is slow in processing them. I don't think they do well in seeing those forms and setting up payment plans. I like to make sure it gets done. I'll use the online payment agreement tool at irs.gov. When they make a payment section, I will call them up on the phone and get somebody on collections or possibly in the practitioner priority service and try and get them to set up the payment plan. And I know that it's done, and I've communicated different things to people. Here's a few other things that I want to make sure that you are aware. Now, keep in mind, from a payment plan perspective, that's what you should talk to people about. When you talk to clients, call it a payment plan. When you talk to the IRS, they know it as an installment agreement. Most people know what that is. The outside world don't use the jargon. Installment agreement is a payment plan. People know and understand a payment plan. Be sure to use those terms. Now, the IRS does allow 180 days. They call it a short-term payment plan. They give you 180 days, and the notice cycle is usually 120 days. From the minute you file the return till the first notice comes, till the last notice comes, plus that last 30 days of that last notice is usually about 120 days. When you figure that 180 days is 6 months, they give taxpayers 6 months, and generally nothing happens in that time frame. Okay, it's not, you don't have to ask for it. It's basically an automatic. So let clients know, hey, if this is something that you can pay in 6 months, then do. But you please need to make sure that they are 100% aware of that any amounts not paid by April 15th accrue penalties and interest. So they will be paying late payment penalties and interest on that. Just make sure you file the return on time, because otherwise you'll be adding late filing penalties on top of that. Have them start making payments. If you know your client is going to be in a payment plan where they're going to pay in full over time, have them start making some kind of payment. Now, normally the payment plans are over 72 months or 6 years. When you have that type of a situation, it's not uncommon for somebody to have the payment be $750,000, $1,000 or more a month. And that ends up being a lot. The minute you can start getting them to make payments as soon as possible, the lower those payments can be, because now you're starting to whittle down penalties and interest over time. And not only that, but they're starting to eat into the principal or the tax that they end up owing. If you have somebody who has multiple years of tax returns, then if you are not, they're not in a active payment plan, installment agreement, then you can have them making payments voluntarily. I advocate having them do it online as opposed to writing checks, or either doing it through irs.gov, doing it through the online individual account. And if they make voluntary payments, you can designate where those payments go. Keep in mind that penalties and interest are, or at least the penalties aspect of that, has not capped out on the most recently filed returns. As we're recording this, we're dealing with 2023 returns. In 2023 returns, the penalties haven't capped out, whether it's late filing or late payment or both. We want to make sure that the payments go to the current year first. Now, when looking at the total cash available, remember the current year. So again, we're in 2024. So first payment should go to the current year. So that would be toward 2024. Then you go to 2023, then to 2022, and so on. Now, the IRS is going to, if you're in a formal payment plan or you don't designate what year tax that the payment goes to, they will apply it to the oldest CSED period, that collection statute expiration date. So they will apply it to the oldest year that they have to collect on it. And so the goal is to make sure that you're designating those payments, have them go to the current year so you can help minimize and reduce those penalties. One thing too, also, like I said, make sure that payments are estimated payments, federal withholding, adjust that in the current year so that we can minimize any additional amounts that they may owe if they're an annual procrastinator who ends up owing money each year. And so we want to make sure that we're doing that. Now, one other thing that you should be looking at doing is making sure that they've got the last 6 years, at least the last 6 years worth of tax returns are prepared. And if not, then at least a substitute for return has been prepared. A substitute for return is one that the IRS prepares on behalf of the taxpayer, but please note that fills in the gap for those 6 years. So you do not have to replace that return. However, you do need to look at it and see, should you replace that return? Sometimes it might lower that tax and help the taxpayer if you can get more data and information from them. Make sure you look at the substitute for returns. Make sure you look at for whatever gaps in the last 6 years. And if there's more tax returns, obviously our duty is to tell them that they need to prepare those returns. You give them the option that the IRS says, hey, you can do 6 years and you're all good and dandy, or you file the 10 years of returns because their statute of limitations is not running. So technically the IRS could come at any point in time and audit those returns. Unfortunately, or fortunately, depending on how you look at it, the IRS doesn't have the time or resources really to go back on those years. Make it their decision. I've had people who say, yeah, I just want to do the least amount as possible. And I've had some people say, I want to 100% sleep better at night, knowing that it's all done. I want to do all 10 years. And you get that information and prepare those returns as best you can. Okay. And lastly, make sure that whatever you do, you try to get them into a payment plan as quickly as possible, because not only are there benefits to lowering the penalty rate from 1% to 0.5% per month, but getting them in that pending status, once you file the installment agreement, that usually they're in a pending status, usually up to 30 days. But once you get them in that pending status, the ability for the IRS to file a levy, a garnishment, doing any bad situations like this, usually it is taken off the table. So do that as quickly as possible, especially if it's now been more than a year since that return was filed and the payment hasn't been made. Okay, because the longer the time goes, the more likely chance that a levy or a garnishment, and God forbid if they get a more than 6-figure tax liability with less than 6 months left on the CSED period, it's not uncommon to have the Office of Chief Counsel file a suit in court and do what's called reducing it to judgment. And what that does is it resets the CSED period to 20 years. And you don't want to do that, especially when you only got a year or 6 months left. If you have the client, even if they're just making voluntary payments and not in a formal payment plan, is better than not just doing anything and ignoring it, because they will come after anything they can, your government pensions, your Social Security, wages, anything they can get their fingers on if your client is ignoring them. One great resource that we have, and I will put this link into the show notes later, but I have a link. I have a handy little 2-page cheat sheet that I've created on various types of installment agreements. I laminated it so I can use it in my practice and show clients. And it's nice, pretty, colorful green check marks, red X's to explain which installment agreement is the best based on their type of situation, if you know that they're going to fit into an installment agreement. Hopefully that will be helpful. You can download that free resource to use in your practice. Lastly, we have our upcoming event, the TaxPro Profit Maximizer Expo 2024 in Dallas, Texas on November the 13th, 14th, and 15th. 3 days we will be spending talking about marketing and practice management and sales topics that will help you in your practice. And I will put the link to buy your tickets. Prices will increase on September the 30th. So I'm giving you a little bit of time after the 9/15 deadline, but prices increase. They're currently at $497. Members of our Tax Resolution Academy get an extra $100 off. Come to Dallas, spend some time with us, network with other people, and find out the ways. I'm always about trying to see helping clients increase their revenues, deal with good clients, get rid of bad clients, and empower them, get rid of those procrastinators that we talked about, and about saving time, or I like to refer to it as winning back your time. Doing things, processes, procedures, hiring people. There's so many different ways that you can go about doing it, that you can leverage other people, other tools, other practices that you can win back the time so that you can use it for the things you enjoy most in your life. For me, that is spending time with my wife, my 3 daughters, my grandson, and my soon-to-be next grandchild. We don't know what it is at this point in time. That's due somewhere shortly before Thanksgiving, and excited for grandchild number 2. And that's what I love to do with that. I love to coach youth sports. I love to get involved in my church. Those are the things that I do, and I love spending with my time. I love long walks around the neighborhood, walking the dogs with my wife, and we chat. Those are the fun things. I love to travel. I love to go places. Come to the TaxPro Profit Maximizer Expo 2024 in Dallas, Texas, and we'd love to have you come. I'm really looking forward and excited to it. Hope to see you there. With that, you have a great rest of your day. Thank you for listening to our show. We hope you received some valuable information to help you in your tax practice. The IRS Whisperer is sponsored by the Tax Resolution Academy. If you have any questions you'd like to see addressed on the show or comments to help us make it better, please reach out to us on social media. Follow us or download our shows on your favorite podcast app. Tune in to our next episode where we'll give you some more exciting information to help you grow your practice.